So when you say
Like
there's
that.
thousands of them, there's thousands of tax credits like that you're working on.
There are a lot of credits, and especially with the brand new tax laws, there are a lot of credits that affect a ton of small businesses. There's employee retention tax credits, which are literally affecting at least 50% of my businesses that we're working on. For them to be able to get some credits on basically keeping people working during this
All
COVID
right.
time.
Does that tend to be industry specific, or is it just across the board?
It's across the board for the employee retention tax credits for 2021. If your revenues are down 20% compared to 2019, if you're able to show you're 20% down for a quarter, then you get it. And it's a great credit. It's 70% of each employee's pay up to $7,000 per quarter.
Right.
So it's a great credit. There's a few other hurdles, and as we have to put with all these things, talk to your accountant to make sure that you qualify. But that is the nuts and bolts of it is on the surface. That's the credit that is potentially out there for everyone and who qualifies, and it's a tremendous credit. It is helping a ton of my clients right now.
What's your perception of the knowledge and execution level of clients that you typically work with respect to, are most people on top of this, or do most people miss something? Are most business owners savvy enough to work with a accountant who can help them? Does that make a big difference? Or do a lot of business owners miss opportunities that where they could have got these credits?
The ones who think they can do it on their own miss. A good accountant and a good accounting relationship should be able to pay for themselves at least once a year, if not 3 or 4 times over what you pay them. So
that means it's like a minimum break even. So the accountant shouldn't actually cost you anything because they're paying for themselves in
exactly. And so
savings.
that's my goal every year.